All right, what's good, strangers? Stranger danger. Welcome to day 2 of the PDI. This is going to be our final day of the PDI, so clap it up for your guys' self. You guys made it this far. 1 out of 3 strategies almost done. All right, so we're going to start off this video with a brief overview of what we learned yesterday, and then we'll go in more depth about it. So without further ado, let me get my big head out of the way again. And PDI strategy, right? So where does it come from? It comes from the AMD model. Right, we want to see a clear accumulation level, then a clear manipulation into a key level, and an inversion targeting either sell side, this accumulation lows right here, or highs if we're bullish, or any unfilled gaps, right? So checklist, what do we want? We want to spot the accumulation zone. Boom, got it. What's next? We want to wait for price to manipulate into a key level. What do we get? We get a clear manipulation into this high time frame PD array right here. What comes after that? Well, we want to spot a fair value gap on the manipulation leg. So where's the manipulation leg? It's right here. And boom, we get a fair value gap. So now we're looking for that to get inversed, right? So we want to also have a clear draw on liquidity before entering, right? We just don't want to enter if the draw, especially on the sell side, has already been taken out. So if we do have clear draws still, such as these accumulation lows, this sell side right here, and this unfilled high time frame for value gap, could be a 15-minute, whatever, right? So clear draws on liquidity. And then what do we want to enter off of? Well, the highest low time frame inversion on the 1 through 5 minute in this manipulation leg, right? So the manipulation leg, if it creates a 3 minute for value gap and a 2 minute for value gap, well, then we're only worried about the 3, right? If it creates a 5 minute and 3 1 minute for value gaps, well, we're only worried about the 5 minute, right? So on and so forth. So moving on over to our example, and I know we learned all this yesterday, but let's just go over it one more time before we continue, right? So what are we typically aiming for? Just a 1-to-1 or 1-to-2 RR, right? Low RR, high win rate. That's all we want. So if our high time frame bias aligns, we get an accumulation zone. We manipulate lower, which indicating we want to possibly distribute higher. We sweep past Asia lows, manipulate into an unfilled 1 hour bullish for value gap. Then we get an inversion out of it, disrespecting bearish PD arrays. Well, then we can set multiple take profits. The first one being to these accumulation zone highs, right? Second one can be whatever else the fuck is there. In this example, we have take profit 2, which is London highs, and take profit 3, which is going to be this unfilled 4 hour bearish for value gap. So we can set multiple take profits if our higher time frame bias aligns. Now, if it doesn't align, we're only taking 1 take profit. Let's say we are bearish overall, right? But we see a bullish AMD model opening up. Well, then we're going to take 1 and only take profits at the accumulation zone highs due to the fact that, yeah, boom, it hits our take profit. And what if we held runners? Well, we would have got to stop at break even because there is a chance that these accumulations on highs just get swept out and then we continue lower. So again, if our highest time frame doesn't align or our higher time frame bias does not align, only 1 take profit. And if it does align, then we can set multiple take profits. Okay. Moving on down to do not enter when. Well, if we have equal lows at our stop loss, so right here, I would want to see this get swept out first, right? Or if it does leave equal lows, then we can take a continuation model, right? And because why? Well, we know that equal lows is a high draw on liquidity, so we don't want to put our stop loss there due to the fact that price could possibly come down and stop us out and then go to our take profit. And if that happens, then we're most likely going to be pissed off, right? So we also don't want to enter if we're respecting opposite PD arrays. Now, I'm just going to touch up on this a little bit. Say this blue one is a 1 minute, but we have a 5 minute right here, right? We don't just want to enter off the 1 minute due to the fact that there is a middle time frame bearish PD array, right? We want to wait for all of them to get disrespected, because if we enter just off of the 1 minute, then price can go up. Oh my god, I don't know why my thing is so big. Respect that 5 minute and then continue down, right? Let me get that back down to 1. Boom. So we don't want to enter if we're respecting opposite PD arrays. So if we're going long, we don't want to enter if we're respecting bearish PD arrays, and if we're going short, we don't want to enter if we're respecting bullish PD arrays, right? So on and so forth. And then what else? IFVG happens too far away from the entry, okay? Little touch up on it, and we'll touch up on that today too. Say the inversion happens like right here, okay? Well, why the fuck would we enter right here and have our stop losses all the way down here and our first take profit right here? Look at the RR on this trade, right? So if this happens, then we can set a limit order right here at the inversion, because what do we know about inverse for value gaps? So if you guys watched any of my videos or my inversion for value gap video in the beginner's blueprint, you would know that once price inverts a gap, no matter what it is, about 75 to 80% of the time, it'll come back down, touch it, and then continue higher. But if price is already way the fuck up here, most likely it's not going to do that. So we'll set a limit order. limit order set, if our take profit 1 gets hit before our limit order gets smacked, well then, whatever, we missed the trade. It is what it is. Move on to the next. But if it does retrace, come back down, then we'll get thrown into the trade and hope for the best, right? So those are the 3 things you want to do if you don't want to do if you're about to enter, right? So if you have equal highs or lows near our stops, do not enter, right? If we're expecting opposite PD arrays, do not enter. And if the IFVG happens way too far away from our optimal point of entry, do not enter. All right. So with that being said, let's roll on over to all the stuff we are going to learn today. All right. So moving on to aligning PDI or PDI with time. If you guys watched my open low high close video or my open high low close video, it's the same video. I'll leave the link in the description if you guys want to go check it out after, if this doesn't make sense. But you guys will know exactly what the hell we're looking at, right? So aligning PDI with time. Okay, let's say, what do we know about price, right? Around 9:45 to 9:47-ish, price starts to accumulate, it starts to chop around, and it happens about 3 to 4 times out the week. Again, not everything happens every single time, every single day, but they happen a majority of the time. So if we spot price starting to chop around 9:45, we can expect some sort of manipulation at 10 a.m. and then a distribution, right? Because what is 10 a.m.? Well, 10 a.m. is the opening to a new 1-hour candle and a new 4-hour candle. So these candles to the left and right of us can represent both of those, right? Because they both open at 10 a.m. So if we have 10 a.m. right here and pre-10 a.m. we're accumulating, and at 10 a.m. what do? Let's say we accumulate for 2 more minutes and then we get a clear manipulation higher. Well, what the hell do we manipulate into? High time frame PD array, right? Which is going to be this black box, which is going to represent, let's call it a 4-hour bearish for value gap. Okay, well, this is what price looks like, right? Price is opening somewhere in this general area, right? This is what price looks like. And then what do? We manipulate higher into this PD array, put in the high to the wick. Now what are we looking for? Well, we're looking for a distribution lower, okay? And how do we know we're going to get a distribution lower? Well, we rejected this high time frame for value gap. And we also just disrespected a bullish PD array. And that's good because we want to go short. So say we get that in there, stops at the highs. What are we targeting? Accumulations on lows as our first take profit. And if our higher time frame bias aligns, well, then we can target multiple things down here, right? So 10 a.m. opens high, then what can we expect? If it opens high into a bearish PD array, well, we can expect a distribution lower, right? So price opens, chops around, manipulates higher, puts in a high to the wick, and then we can expect a distribution lower. So this is what it would look like on the lower time frames, and this is what the 1-hour and the 4-hour candle will look like. Okay, and same exact thing over here, just going the opposite way. What do we have? We have a clear accumulation zone, right? So where does price open? Right here. Price opens in this general area. Then what do? We manipulate lower, putting in a wick to the candle, right? Putting in a low to the candle. Here's our manipulation move. Again, what do we manipulate into? A high time frame PD array. Let's call it an hourly this time, right? Let's call it an hourly. 10 a.m. opens, we instantly come lower, right? 10 a.m. opens, we instantly come lower, putting in a low to the wick right here. Boom, boom, boom. And what do? We reject this bullish PD array, also disrespecting bearish PD arrays, so we can assume price wants to change direction and go higher. What can we do? We can enter off the inversion, right? And then again, if higher time frame bias aligns, we can target up here, or if our higher time frame bias doesn't align, well then we can just target these accumulations on highs, right? See how we're putting everything together? This is called aligning PDI with time. So literally just open low, high close, and open high, low close. And the only candles I really use that for is the 10 a.m. because I'm only in the market from about 9:25-ish to 11:15 every day. But you can use this with any 1-hour or 4-hour candle. It doesn't matter, right? Every candle moves the same, even on the 1 minute, right? 1 minute candle opens, manipulates lower, goes higher, right? 1 minute candle opens, manipulates higher, goes lower. Okay, that's just how candle moves and how price moves as a whole. So moving on over to what is not a PDI, right? Because we get my phone's about to die. We get this mixed up a few of the times, right? So here we have a clear accumulation zone, right? If we have an accumulation zone and we see an inversion inside of the accumulation zone, oh fuck, are we gonna enter off that? Ask yourself, are we gonna enter off that? No. Why? Well, because we don't have no manipulation move, right? We still have all this LRL, all these equal lows below us. So what is price most likely going to want to do? If we enter off this? Well, price is most likely going to want to come down, manipulate, and then go higher. And at that point, then we're already stopped out, right? So we want to wait for a clear manipulation move before entering. And the best manipulation move would be into like a 5, 15-minute, hourly, 4-hour fair value gap. Or we sweep out some prominent highs and lows, right? Data highs and lows. Any key level of some sort, right? And then what about this example over here? Well, you see we got a clear manipulation here. Let's mark it in purple just so you can. Marking. Oh my God. I don't know why I don't like that. Marking orange. Okay, can you guys see this? You guys see this orange right here? Okay, we get a manipulation move, right? We sweep out all this accumulation zone lows, right? Well, I don't like this for 2 reasons. Because we have no clear form of a manipulation, right? We did not manipulate into a fair value gap of some sort, even if it's a 5-minute fair value gap. Manipulate into something, some bullish form of some sort to go higher. All we did was just come down and take out all this accumulation lows. And that is not enough conviction for me. And on top of that, the inversion already took the internal high. We just talked about this in the beginning of the video, right? We don't want to enter if the inversions take the internal high. So the inversion happens all the way up here. My stops are down here. Well, this would have been TP1 anyway. So now look at this. Well, that's negative RR. So now we don't want to enter off this at all. So this would not be a pre-distribution inversion due to the fact that, or a valid one. Yeah, okay, yeah, we have an inversion right here and it's probably going to continue up. But at that point, we're going to want to take a continuation model instead of the PDI model due to the fact that it already took out our TP1 and possibly even our break-even point, right? And it gives us shitty ass RR. So these are 2 examples of what not to do if they do present themselves, right? Again, on this one, we want to see a clear form of manipulation move. This one, we have a clear form of manipulation move. So it could have worked, but our inversion happened all the way up here. And when the IFVG happened, we already took out the internal highs. So yeah, we got a manipulation move down, but again, it wasn't enough conviction for me because it didn't hit a key level. See, this is me being picky. Sometimes I will take this entry. I mean, not all the way the fuck up here, but like say the inversion was down here. I will take this entry if we have a strong bias, right? If there's like mad unfilled gaps, if these are like equal highs or whatever on London, if we have an SMT, right? We have to build conviction, but if we have no conviction and just get this measly ass fucking manipulation move, then that's not enough confirmation for me. Chances are I'm going to want to see some form of continuation, right? So moving on to, that was what we don't want to see. Moving on to what we want to see now. What do we want to see? Exactly this, right? Clear form of accumulation. And again, I've probably shown like 45 examples. We'll get into the charts at the end of this video. I'll show you guys on the charts. But what do we have right here? Oh my God. We have accumulation, manipulation. What do we manipulate into? A key level, right? Let's call this one a 15-minute fair value gap at this point. Well, that's fine. 15 minutes fine. Even if it was a 5-minute, that's fine. Let's hit a fair value gap and let's reject it, right? Clear form of manipulation. As soon as we hit the fair value gap, we instantly reject it. Boom. We got targets below us that we want to target. I'm going short all day, every day on this, right? Going short all day, every day. Stops at the swing highs. Take profit 1 at this accumulation zone lows and take profit 2 down here, whatever the fuck. Same thing over here for our bullish example. Clear form of accumulation. Clear form of a manipulation. Okay? Fuck. I'm over here clicking around too damn much. And then a clear form of a distribution. And how do we know if the distribution is coming? Well, because we get an inversion down here. So what are we doing? We're going long. Because why are we going long and how does this confirm itself? Well, what do we manipulate into? High time frame, fair value gap. And again, it doesn't have to be fair value gaps. If we sweep out prominent areas of liquidity, right? These areas could have been like session highs or lows, whatever the fuck. Doesn't matter. Just a key level, right? And again, I'll leave the key level video description or a link in the description. So if you guys don't know what a key level is, you guys can go check it out. So this is exactly what we want to see. Clear form of accumulation, clear form of manipulation, and then a inversion fair value gap to then enter, okay? So again, good versus bad manipulation move. What do we have? Accumulation zone into what? Into a high time frame PD array or just a PD array, right? And then we reject, get an inversion out of it. And again, I'm just showing you guys these essentially same examples over and over and over again so you guys can get it engraved into your brain, right? And I hope you guys are taking notes. Now, what is this? This is a bad manipulation move, right? Because, okay, yeah, maybe right here we got a manipulation move. But what is above us, right? We have an unfilled gap above us. So what we would want to see is something like this, right? But what we got is something like this. So this is no clear form of a manipulation. So if we inverse this right here, whatever, okay, probably not going to enter, especially if I don't have conviction. But let's say this was the IFEG right here, but let's say a 5-minute gap opens up right here. Then what? Then we can wait for price to retrace in this 5-minute gap, and then we can see another inversion out of it and take a continuation trend. And we'll get into continuations tomorrow. It's actually really fucking simple. It's probably the easiest strategy out of all of them. But then we can take a continuation trend, right? Because we don't want to just take this first inversion because price could just come down like this and then shit, possibly even come back up and target this unfilled fair value gap and then come back down, right? So this is why in this case we would take a continuation model, right? Hold on. I feel like you guys think I do coke, but I don't. I just always like, I don't know. When I'm on camera, I just always tend to just do this. But I promise you guys, I do not fuck with the nose candy. Anyways, let's move on to the charts. Yeah. Why are we talking about this? Was an example from today, actually. Today is August 12th. What do we have right here? Don't mind the pink one. But what do you have in this general area, right? Just have an accumulation zone. Okay. Actually, let's get rid of this purple one. So we have an accumulation zone. What do we get? Well, we get a clear form of manipulation. What are we manipulating into? Let's come up to our higher time frame. Actually, I'm going to do this because it's a lot easier. What do we manipulate into? A 15-minute fair value gap. Oh my goodness, right? So clear form of manipulation into this 15-minute fair value gap. Then what do we get after that? Then we get an inversion of a 5-minute fair value gap. Okay. And what ends up happening? Let's mark that black. I'm going to get rid of the red and blue boxes because it's pretty clear, right? So we have an accumulation zone right here. We manipulate higher into what? This 15-minute fair value gap, end up respecting this 15-minute fair value gap. And then what do we get? We get disrespect of a bullish PT array, which is going to, oh, this is a 4-minute one, of this 5-minute fair value gap. So what can we do? I didn't take this trade because, I mean, the stop loss was just atrocious. 71-point stop loss. But let's say this is on a lower time frame. Could have took this all the way down here to, well, where did I want it? I wanted it right here at data lows. And what do we get? We get a 1-to-1. And price smacks our take profit, okay? So it's not like I'm just making this shit up with the PDI, right? This is an example of like a higher time frame PDI. What do we get? We get a accumulation zone, manipulate higher into a 15-minute fair value gap. And it looks like we inversed it, but if we come to the 15-minute, right, a 15-minute fair value gap has to get inversed on the 15-minute. We clearly respect it, right? So you manipulate into this 15-minute fair value gap, and then we shit the bed lower. Hold on, I gotta sneeze. Fuck. Okay, and let me show you guys the trade I took. So this was the trade I took this morning, which on my evals it ended up bringing a break even, but it ended up ripping TP, and on my XFAs I actually took profits right here and closed the rest. But what do we have, right? We have a clear accumulation zone, and my eyes lit up when I seen this shit, right? So here's our clear accumulation zone right here. Okay, let's mark it in blue. Well, what do we get? Okay, yeah, this is our only manipulation point right here, but it's not like we only just swept out these lows. What did we also take out? What did we come into, chat? We came into a 15-minute fair value gap, right? We manipulated right into this 15-minute fair value gap. And I'm going to mark this black. Let's come back down on the 1 minute. So what do? We have an accumulation. And then we manipulate lower into this 15-minute fair value gap. And then what do we do from there? We get an inversion right here. So I'm entering. Boom. Now, I moved stops to break even due to the fact that we had a bearish SMT with these highs on ES. But what did price end up doing? It ended up going to all-time highs, right? So here's an example of a lower time frame PDI, right? On the 1 minute, accumulation, manipulate into a 15-minute fair value gap, which is perfectly fine. This is a continuation model PDI. And then we catch the move up. Understand? Let's take a look at a few more examples. So moving on to example 3, I guess you can say. This was, again, my trade from Friday. So what do we have? Well, what do we have right here? 10 a.m. opens. Okay. This line represents 10 a.m. What do? We come up and instantly go higher, right? 10 a.m. opens right here. We're creating all this trend run right here. So now the 10 a.m. candle, as of right now, looks like this. As of right now, this is what the 10 a.m. candle looks like. Right, we opened right here. And we've came all the way up. Yes, we have this little wick, but it didn't sweep out anything, right? So technically, this is still a 10 a.m. open high. That little wick doesn't mean anything. But what do we get? We get a sweep of the previous day high. Now, I don't know why it looks like this, but we got a sweep of the previous day high, and we also got a previous day high SMT. So now, what the hell can we go and target? Well, we have 2 targets. We have this unfilled 15-minute, and we have this unfilled 15-minute. Okay? What do we get? We get an open high into a key level, which was a liquidity sweep in this example. We get an inversion. What am I doing? 10 times out of 10, I'm entering. And what did I do on this position? I entered. Where was my stops? At the swing highs. Where was my first take profit? Right here. And my second take profit was actually down here. And even though I was going against the high time frame trend, this is why you only take 1 take profit, because I got fucked on, I didn't get fucked, I actually won. But on my XFAs, I had 2, I went in for 2 minis, right? First take profit and break even point was the first 15-minute fair value gap. And my second take profit was the second 15-minute fair value gap. Well, what ended up happening? Boom. My first take profit got hit. I'm out. I'm still in 1 contract, but now my stops are at break even. Well, what ended up happening? Price ended up reversing and continuing to trend higher. So this is exactly why we only take profits at 1 area when we're going against the trend. But it still works in the trend, right? Because we had a 10 a.m. open high, sweep past a prominent area of liquidity where there was a possible area of reversal, which we did get for the little time being, and that's all we needed. Why? Because, like I said in previous videos, we're only aiming for it, and look, it was perfect. It was a 1-to-1. We're only aiming for about 20 to 50 points in the market. I'm not a swing trader, right? I don't give a fuck about the 150, 200, 300 point moves. This is all I'm looking for right here. So we're scalpers, right? This is all we're looking for. Come past the previous day high, creating an SMT. That's our key level, right? Previous day high. That's a high time frame, high or low. What do we get? We get a 10 a.m. open high, PDI with time, right? Trying to catch a pre-distribution inversion, because we still have to put in the low to this candle if we want to go higher. We haven't done it yet. So what do we get? We get a sweep of all this LRL. We get a tap into this 15-minute gap. We're done. We're out. And then what does price end up doing? It ends up continuing higher. Okay? So that is all what PDI is. You're just trying to catch the inversion before the distribution comes. Pre-distribution inversion. Okay? So if you guys have any questions, again, please feel free to DM me on any social media at LoeGpa. Comment in the comment section if you guys need any help, if you guys have any questions, comments, concerns. Okay? I will leave every single video link in the description that you guys need, whether it's a key level video, inversion for value gaps, normal for value gaps, open, high, low, close video. That will be in the description, so don't worry about it. If you guys have any questions, just check out the description or DM me, all right? Appreciate you guys for watching. That is all for the PDI. Tomorrow, we'll be coming back with the continuation model, and then we'll finish off on the mech model. I believe it's going to be like Saturday. So with that being said, you guys have a great night. Like I said, DM me if you guys need anything. Drop a subscription. Drop a like if you guys liked this video. If you want, I don't know. I don't need it, but it'll be cool if you do. Fizz calling. Hold on. Hello? Oh, what's up, Fizz? All right, bro. I'm done.